Welcome to AGNT, the podcast for enterprise tech meets the agentic era. I'm Gemma Allen, joined by my co-host Raphael Dornano, broadcasting from the New York Stock Exchange. And every episode, we unpack how intelligent systems are reshaping companies, markets, and the way real work gets done. From Fortune 500 boardrooms to breakout upstarts, we're digging into the strategies, technologies, and people defining the next chapter of AI. Let's get into it. I'm Gemma Allen with Raphael Dornano, my co-host, where we talk about Fortune 500, bridging the gap to the agentic ready. Welcome, Raphael.
Great to be back.
So you have had a lot to say this week on many topics, as you always do, but one topic that is very front and center, headlines, getting a lot of visibility and hype, is Anthropic. Let's start there. And let's look at these numbers for a second because they are absolutely baffling. So first, Anthropic's revenue run rate. So from 87 million in January 2024 to 9 billion in February 2026 to 14 billion in March, 19 billion in April, and now an estimated $30 billion, right? This is truly something. Like, this is like nothing we've possibly ever seen before. What do you think got them here?
Well, I think so. This week and the past days have been crazy in AI land, and it's true that Anthropic came front and center with their $900 billion valuation, of course, and the fact that for the first time they were showing a profitable quarter in Q2. So I think really the headline number was that not only is this company growing at like mind-boggling proportions, and we'll be back to that, but for the first time, and this was, I think, quite surprising to everyone, the company can actually print profitability, which is not what anyone was thinking. When you think about an AI lab, you think this is a huge pitfall and there's going to be a ton of money like burned in compute and so whatever. And Anthropic is like, oh, well, look, not only are we growing like crazy, that's the only term, but we're actually showing profitability, and we'll be back on what that 5.1% means just after. I think that Anthropic, understanding its success and how it got there, goes well beyond a single company. It goes beyond how AI labs are gaining traction and what is at stake with enterprise software. Let's remember that every time Anthropic does something, says something, you have now an immediate market reaction in the next day, in the next week, which are sometimes trillions of dollars that are moving, right? We saw that with the SaaS apocalypse beginning of February, and there's a bit of this and there. Ever since then, it's, oh, this plugin in design, this plugin in like security, and things are moving, I would say, almost on a daily basis with this company. Anthropic has been able to secure a position that is not a monopoly. It's a very fierce competition, I would say, with Google on the one hand. Maybe they're losing a bit of traction, but they should be back. And OpenAI, which in the contrary was falling behind in the enterprise and is now actually in front of Anthropic, I would say, with their Codex model. I think from the developer community, many will tell you that they have actually gained traction that they had lost. So right now, we can say for sure that this is an oligopoly. We have 3 players. XAI is probably behind. What they do with Cursor will be interesting. So maybe 4 players. For now, 3. Anthropic within this game is the only player that has focused with a big F on the enterprise since the start. They have no diversification with a consumer mode. They have no other businesses. They have a very strict business of we provide the brain and increasingly the nervous system for AI to work in the enterprise. And they have built this architectural, like, agentic AI structure with their launch of the MCP in November 2024, which, in my view, was the key foundational move of how they got there. In May last year, I published a piece called Orchestration is the New Moat, Not Model Capability. At that time, and I looked back last week on my notes from last year, Anthropic was really the underdog. This is what we need to stress. In May 2025, Anthropic was seen as like, who is this company? OpenAI, for sure, it's going to win, etc., etc. People had said that they were like invincible, and Anthropic was really not in the spotlight as except from a model capability standpoint. And I would say over the 6 months that came after the launch of the MCP, so from November 2024 to let's say June 2025, they really gained that momentum because not only did they have like a very critical brain, but they were building what agents and now agentic AI systems need, which is connecting the brain to how work gets done in the enterprise.
So if we take Anthropic for a second in terms of their hyped potential IPO, I mean, no one knows for sure, but it's certainly looking very likely. $1 trillion valuation potentially. They're saying that secondary shares are certainly selling right now for that $1 trillion number, right? So things are lining up that direction. I mean, personally, I like Anthropic. I like Claude. I think it's a great product. I like Daniela and Dario. You know, I like what they stand for. I like anyone who takes on Pete Hegsworth, for example. You know, it's an impressive company, but there are also like a number of factors in play here that create somewhat of a house of cards effect, right? When we think about a company like Anthropic, they had a very successful quarter from a marketing perspective. I think Mythos was an exceptional marketing exercise, if anything, right? I'm sure it's based on absolute valid security concern and all that, but they created a huge scarcity meets the market style hype around their product. They have gone into bed with some interesting folks. Like, we can't stray from the topic of XAI and the Musk combination, which is obviously happening at the same time that he's in court against Altman. They have a number of big companies, you know, in backing them, right? But there is definitely reason to believe that there are other factors that play too. Like, we don't know how successful open weight models and will be in enterprise 5 years from now. We don't know what's truly going to happen from the perspective of human ownership at an enterprise level across all of these industries like law, finance, where they're having a huge impact, right? There is nothing to say that this is absolutely, you know, a completely solid moat as of yet. And there's still $1 trillion valuation here. Like, how do we weigh this up?
Well, I would propose a simple way of framing this, which would be, let's think about 3 different onion rings. So onion ring number 1, it's the intelligence. The actual model weights, is the model better than this other model? Like, this is what we have been accustomed to think about. Layer 2, or onion ring 2, is what the community calls the harness, with an H capital. The harness is what allows the model to run tools in a loop to actually deliver a result for an agent or for a human user. So you're going to go and fetch the right files, you're going to go and fetch the context to actually make the agent work, because an agent without context is a body without a brain, as I like to say. So you have intelligence number 1, ring number 1, hardness number 2. Anthropic is probably a winner at a hardness level. Like, they have the great capabilities, but because of the MCP and every subsequent action, just last week they released like managed agents allowing to deploy private MCP servers. This is a huge architectural move with Cloudflare, Versal, Daytona, all great private market companies that are like at the point of what is happening here. This is from like last Thursday. So harness, okay. Layer 3 is the application level. The application level is, are your agents going to replace enterprise software, hence the fear of the SaaS apocalypse, etc.? How is this going to play out? People are projecting a lot in Anthropic is not only the intelligence, the harness, but also the application, which they can be in a lot of verticals, in legal, in finance, in design, across horizontal functions. But it is not like for sure that they are going to replace enterprise software in ERP, CRMs, HCM management, etc., etc. So right now, and I love Anthropic, I think it's an amazing company, I would say that the narrative is a bit ahead. People are projecting that they win at all 3 layers. I think on layers 1 and 2, they're amazing. Layer 3, this is a configuration that is being worked out, and there is more nuance that we want. a second important point when you put that architecture aside, and this was stressed by the information last week, and it's a critical point, it's right now, enterprise IT budgets have been like all over the place in terms of, okay, you can go and spend not whatever you want, but you can spend unlimitless. I heard this morning that an engineer from Meta had spent $500,000 in 1 month for, I don't know if it was in 1 month or in 1 week, but like token maxing, right? The phenomenon. This has been over Q1 of this year, really the default state. It's, oh, this is impressive. Oh my God, this is great. So companies that are seeing times 10, times 20 increases over 1 month, 2 months of their cloud budgets. What is happening? The IT teams are saying, okay, so we're cutting this software provider, we're cutting this software provider. Oh, and we're also cutting those other 5 software providers because they need to make room for cloud. What we're seeing now, and this is very recent, and it came with Microsoft like last week also, lots of things happened last week, it's, okay, maybe this is costing way too much. Maybe our IT budgets have to be a bit under control, and maybe it's not as simple as getting Anthropic and cutting all of the other budgets, and we need to think about this a bit more. Sorry to be caricatural, but this is what is literally happening in the biggest companies of the world right now. So being very bullish on Anthropic doesn't impeach me to think that there is going to be a slowdown, not necessarily in the absolute level of their growth, which I don't think at all, but in the level of replacement of IT spend that exists at any Fortune 500 or beyond company, because this is getting a lot out of control. And there's nothing bad in what I'm saying. It's a very like statistical fact. So you have to take that into consideration and look at what I call growth endurance. Growth endurance is your ability to sustain a level of growth in percentage quarter after quarter. So it's not looking at the absolute levels, which are going to go crazy up for sure. It's looking at the ability of the company to continue delivering those net retention figures at the same space. I have more doubts because of what I said. And last, as you mentioned very precisely, the way agentic AI stacks are configured, you have the master orchestrator. The master orchestrator, you need to be at the very frontier. The 1% difference in capabilities between this and this model matters to actually command an agentic system. But in an agentic chain, you can have agents that are going to respond to the master agent that can be subpar agents. And Anthropic, when they were having their compute limitations, very cleverly launched what they call the advisor strategy, which allows Cloud Opus, their core model, to go and fetch the other Cloud family models to be aware of, to be limiting the compute that is used in that agentic chain. So you can perfectly imagine that you're going to have Claude as the captain of the agentic branch, going and fetching open source models, either from Google, either Chinese, either from like the AI labs, I don't know. I think we are heading to that. But Anthropic, in my view, can still very much keep the captain position, or Gemini, or Codex, like one of the three. But then below, a lot of things can happen. We're just starting to explore what the compute need looks like, the compute needs look like. We're still at, I always say, at 2%. Maybe we're at 2.5%. I would still say we're at 2%. We are only at the beginning of inference in the enterprise, and we're going to need a ton more compute. This is very mathematical.
So if we move from what got them there to what will keep them there for a second.
Right.
So you mentioned some interesting topics there, like token leaderboards. Very interesting concept. We heard a lot about them last week at Dell Tech World. Some folks brag about them. Some folks have a very cynical view on that type of spend. Mm-hmm. We know tokenomics broadly is a conversation of mass contention. We heard about folks having developers spend 5-6 grand a day, which seems little compared to that Meta dude. But
right.
Again, you ask yourself, is that a great developer, or is that somebody who maybe isn't very good at prompt engineering? Right? There's some questions there. But we know that Google this week have said to some of their customers, look, we know tokenomics are out of control, use this lesser model, this flash model, etc. Right? So it's happening. What we don't really fully understand, I think, yet at any level, is how truly sticky any one model is and will be. Right? Like we knew that in the era of hyperscalers, in the rise of these huge enterprise monolithic companies, Microsoft, Salesforce, whoever, that really, really controlled enterprise because they controlled your Active Directory. They controlled your line of business applications. Things are built on your stack that were very difficult to unravel, right? We don't know what that will look like 10 years from now, but I imagine there is a belief in the back of everyone's brain that it's going to be somewhat of the same, right? You're going to be locked in some way. How true do you think that is?
Well, go back to my metaphor of the 3 onion rings. This is really about onion ring number 2, which I call the hardness. Menlo Ventures did a very interesting study last summer showing that only 11% of companies were actually changing model providers when they were using Anthropic, because precisely when you put a model into production in a given workflow or in a series of workflows, the way that model runs in that loop to get the tools and to actually deliver an outcome, okay, matters a lot. Not just the intelligence, but how the whole intelligence works to give you your result as an enterprise user. And Anthropic, why did I say orchestration in the moat last May? Because that is what Anthropic has been playing. And then you have coding is the wedge. So you had orchestration is the moat and coding is the wedge. They built their configuration and their stickiness in the enterprise AI stack by going beyond we just have a great model, but by allowing that model to actually deliver concrete results in the enterprise. What is missing today is, of course, enterprise work is deterministic. The context layer, like where do you go and get the context? What allows the specification layer? That is not something that is brought by Anthropic today. That is brought by the traditional software providers, or is something that needs to be built. So it's not perfect yet at all. But Anthropic has so far done a very good job at going beyond the pure LLM capability into building that stickiness through architecturing the system. Now, the question that remains is, will they be the ones that complete the last mile? So are you going to have companies that deploy their fleet of agents in their own environment, in a hyperscaler environment, using Claude agents and doing the whole work on Claude? Or are you going to have enterprises deploy those same agents with the same intelligence in enterprise platforms that provide so many things that make agents actually work in the enterprise, and notably the operational context that matters for enterprise work? That part is what is going to determine whether this company goes from 1 trillion to 4 trillion, 5 trillion. I mean, why not? To the moon? To the moon is the right term. Or does this company get capped as a technical provider, which is not their play, we can see from what they're doing, in which case you would have a problem because competition is only going to accrue, and it's not about Chinese or US open source. Of course, there's going to be in those subpar models a lot of competition happening because they will not need to be at the very frontier. So that is the number one debate. What happens in the enterprise? Does Anthropic go to that ring number 3 and provide a full vertically integrated stack? Maybe one day they have the chips. Layer 1, 2, 3, you have layer 0, which is the chips. Today, they're dependent on others, now on XAI for the compute. Very ironic. Let's see. But maybe they go up and they also go down.
Maybe Google has the chips, right? We have a lot of reason to think
Right.
Google haven't made the progress that they may potentially make as of yet.
Of course.
But when we talk about that last mile, do you believe that this pricing, this $1 trillion valuation, is priced on the assumption that they will own that last mile? Or do you think the market is reading this right or wrong?
No, look, I think that that's a worldview that I propose here. Right now, the market is saying amazing traction, amazing growth. It's valued over 30x time revenue. It seems, run rate revenue, of course, it seems cheap compared to OpenAI, which is more valued, I think, 35x per the latest calculations. the market is not going that far. The market is like, okay, this company is like going to the moon. Based on that, we have a lot of convictions. They have been able to solve on the short term what was their biggest bottleneck, compute. In March and April, you had like striking conversations with hedge funds that were saying, oh, the SaaS apocalypse is probably over because Anthropic doesn't have enough compute. I was like, guys, I don't think that Anthropic is over because it doesn't have compute. And so, of course, Anthropic found, I think in 1 week, like they did all those deals, including this very, I don't know if ironic is a term, but let's say surprising to say the least, deal with XAI on compute. They solve their problem on the short term. It doesn't solve the problem that they're going to need massive amounts of compute to continue on the same trajectory. And again, the adoption curve, let's not forget that, the adoption curve must not bend. Why? Because let's take a step back on the numbers. Everyone is very excited, rightly so, because the company is showing profitability on second quarter of the year. First, you have a ramp up in the cost of the XAI compute where in May and June, it's not the full price. Number two, you have, of course, stock-based compensation. So if you were to do the calculation, you would either end close to zero, maybe negative, I don't know, but the 5.1% margin would change. But what happens on the next quarters if the growth rate slows just a little bit, the compute expense is known, then you have a problem and maybe you're not profitable anymore. Investors are wanting to know whether the profitability that is announced in Q2 that is very fragile, again, I'm not saying it's bad, I'm saying like it's mathematical, does this continue? Because when OpenAI goes public, or is XAI, which is going public like right now, it sets a precedent. If you say, well, you can be a hyper-growth company growing with those levels of net retention, of growth endurance, and you can also be profitable, wow, like that's going to be, okay, the default configuration. So if you have OpenAI that goes to the public markets and says, hey, we're growing and we have the same traction in the enterprise, but we're not at all profitable and our gross margin and EBITDA margin is not comparable, you have a problem for the one that comes just after. But to the surprise of everyone, perhaps, Anthropic seems to be going to IPO in rank number 3. It's very interesting. I don't know if people were expecting that OpenAI was going to go so quick, and maybe it was a very good PR communication that they said we're not ready at all to go to IPO, and oh, now they dropped confidentially their S1. I think this was very good PR. SpaceX we knew, but it's going to be interesting because if Anthropic goes first with numbers that are good and this position, boy, it's going to be hard for OpenAI. But I think they're going to go after. Look, let's see.
Well, let's see for sure. Okay, so to wrap, Anthropic, not hype. It's very real. It's a well-deserved valuation. There are some question marks in terms of what this valuation signals to the broader market. This whole conversation around AI is being somewhat confused and diluted and having mass impact in a micro or macro way in other parts of the market, like SaaS, like other high impact areas, right? So there's definitely some things that need to be figured out here and unraveled. How do you believe that will go? You say it's going to be interesting from the perspective of OpenAI, but what do you think it's going to mean? What do you believe this valuation will mean for those SaaS players if they go public first?
Again, we need to solve the question of, with every single workflow that is reimagined with this new brain and nervous system at the core. Anthropic, the harness, no matter what the model, the harness. Enterprise software has a different role. The companies that were just tools or that were wrappers around the intelligence, they lose 100% of their value right now, and they have lost, I will not give the names by respect of these companies in the public markets, but some of them are valued 1x revenue and are probably going to continue going lower. So that, I mean, the discount has been made, and it's a very, very severe one. The question becomes for the system of records and their ability to move into systems of actions and become the platforms in which work gets orchestrated. because they have the context, because in the case of Salesforce, for example, they have the entry door with Slack. That's one example, and Microsoft has Teams. It's the redefinition of what is an enterprise software company with these new brains and nervous systems that are adopted by every single company in the world, tech and non-tech. So it's a very real debate. I think what happened to the detriment of SaaS over 3 months was there was, and I think we had commented this on the show, it was very undifferentiated. You were a SaaS company, you got punished immediately because of like an AI threat. Now it's like, okay, let's get into real analytical work and nuance. If you're a pure wrapper or a tool, sorry to say, you're in really bad shape. There's nothing I can do for you. If you are a system of record and you're able to redefine what you mean, who you are, with that new reality, which is not going away and which is working more and more, what do you provide that is missing from the LLM and from the harness that allows enterprise work to be done properly with the right results? Because you cannot afford, when you're doing accounting, when you're doing taxes, when you're doing even non-financial work, just any work in the enterprise, it cannot be right 90% of times and wrong 10% of times. It needs to be right 100% of the times when you're processing any work that you can think about. So this is a big question mark. Enterprise software actors are working, I think, very hard to reinvent themselves. And you can see with what Salesforce did with Headless 360, which was the biggest architectural change in 27 years. It's one example. Workday last week had, two weeks ago, had very positive reactions to their earnings. Let's see how this plays out. This is the most fascinating time for enterprise software because there is a real challenge, and investors are starting, hopefully, to understand the paradigm change that we've often talked about. This is not a hype. This is not a bubble. There may be bubble elements. There may be a lot of, like, again, things that are not deserved. But if you ask me, does Anthropic deserve its valuation? Which you asked me, is this very real? And is enterprise work being changed fundamentally? My answer 100% is yes.
Well, Raphael, it is certainly a very interesting time. Lots to come, I'm sure. As you say, that paradigm is continuing to shift. So look forward to catching up with you next week and seeing what has happened in the week since we met. Thanks so much.
Thank you.
I'm Gemma Allen at the Cube Studio here at the NYSE. This is AGNT, where we break down the Fortune 500 against the agentic era. Thanks for watching.